can't understand this economy unless you understand digitization. It's a relentless force that upended nearly every industry under the sun. And there are few companies that know digitization better than J2 Global. JCOM for you home gamers, which is a hybrid online media and cloud services play. You might recognize them from some of their big brands, IGN, Mashable, Humble Bundle, Speedtest, PC Mag, Offers.com, new one, Spiceworks, among others. But J2 also gets about half of its sales from cloud services, including an online fax platform, a virtual phone system, cloud-based data backups, and email marketing solutions. This company has grown into a $4.8 billion digital powerhouse by making a series of very smart acquisitions. And we know these deals are paying off because they just reported a strong quarter late last week. That's why the stock hit a new high today. It's up more than 40% for the year. So can this relatively unknown name keep climbing? Let's take a closer look with Vivek Shah, CEO of J2 Global, to get a better sense of the quarter and where his company's headed. Vivek! Welcome to Mad Money. How are you? Okay, I've known Vivek for many years, which is why I stumble on, because it's difficult for me to call you Mr. Shaw, because I've known you for way too long. Okay, first time on the air. Why don't you give people the vision and what you've done? Because you've really created such a powerhouse, and in not that long a period of time.
So we are a portfolio of internet brands, as you said. We operate media brands, IGN, Mashable, Humble Bundle, Everyday Health, Baby Center, and then software brands, so iContact, Viper, IPVanish, about 40 brands in total. And so I think there's some common themes about these brands. So number one is they all share highly recurring revenue. So that's an obvious statement about subscription businesses, which is about 60% of what our company does. But the other 40% is advertising. And in our advertising business, it is 80 to 85% of the revenues recur annually. So we love the stability.
But you taught me that ad is a tough business. Why is your ad business better than the other guy?
Well, so what I'll say is the balance is great. So I think of the subscription business as the running game. I think of the ad business as the passing game. You have a combination. Hopefully you have a winning team. In our advertising business, I think a lot of advertising businesses are about selling impressions, selling display ads. They call it cost per thousand priced advertising. We're focused on performance marketing, so leads and clicks and acquisitions. And so when we're generating customers and delivering customers versus delivering impressions, we find that the market embraces that. And generally, marketers have a cost per acquired customer, right? Their CAC. As long as we can continue to deliver customers within their CAC, all day long, there's no cap to the kind of spending that they'll do with us.
Well, this is amazing because I know what you've done, which is just keep finding the properties that others even don't understand their own properties. Or you take advantage of the fact that the market's now closed, the unicorns already. Talk to me about Spiceworks, because that's a very exciting deal.
Yeah, so Spiceworks is in the enterprise IT space. It's a publishing business, it's a software business. We have a bunch of brands in that space. So this was a natural coming together where we get economies of scale, there are some natural synergies. But I think probably the most important part of the Spiceworks deal, and many of our deals have this kind of situation, they were on a VC track. The VC track can be, and often is, different than the track we're on. We will take lower revenue growth, slower revenue growth for profitability. So for us, driving profitable growth, earnings, generating free cash flow, that's what our business is about. That's how we run our properties. And so to take a company like Spiceworks, put it into our system, put that discipline and approach to the business, will create a tremendous amount of value.
Okay, about a year ago, you told me, Jim, that era of just wild growth and no profitability, it could end. It just ended. How did you know?
Well, I don't know if I knew. I mean, I think markets tend to get back to rationality. And so from our point of view, cash is king. The purpose of J2 is to generate free cash flow. We've been doing it really since our inception. I think from the beginning of the company, 23 years ago, we've generated $3 billion of free cash flow, which, by the way, we've redeployed in acquisitions. So we have spent $3 billion in acquiring assets. And we kind of look at it as the cash flywheel. We run our businesses for cash. We use that cash to acquire new businesses that we then optimize for cash. And we just continue to repeat. So, I think our time has come. I think we are different than a lot of businesses. Look, I think anyone can spend $1 to make 75 cents.
You're talking about the Uber model.
talking about some models that are out there.
Well, look, I know we are old friends. I know it's not about friends, it's about money, but you've taught me so much. And I know your family's a big fan of the show. I want to say shout out to Andrew, who I know is watching. And I just think that what you've done is create a company that I cannot believe. I mean, I've been trying to get you on for a while. I can't believe people don't know it, because it is just a powerhouse.
Yeah, I mean, we're doing well. We're executing, and I think that's critical.
Well, excellent. Vivek, it's an honor to have you on the show.
And thank
you so much. That's Vivek Shah, CEO of J2 Global, JCOM, one of the greatest business people I have ever met. Mad Money is back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.